All right, everyone, here we are with ticker symbol FSR, Fisker Inc. And before we jump into this chart, I want to say welcome to all my first-time viewers and investors. Welcome to my channel, Invest for Tomorrow. And to all my subscribers, welcome back, and let's jump into this chart. So as we jump into this chart, I do want to announce that at the end of this video, there will be a trivia question. I will be discussing about that question towards the end, but the question has to do with one of the cues that will be important for the next couple of weeks and days as this continues to roll out. So when these trivia questions, I roll them out, I want to try to do them for every video so that you guys can memorize and pay close attention to these important cues based off the chart. So hope you guys find it helpful and informative. Let's jump into this chart. So Fisker Inc. has been in a bearish run and it hit lows here of 880. That's the lowest point reached in this bearish run. Now, the point of reference where it was the lowest point before it ran up, right? Because it actually, after that 880, it ran up and it started to dip. The lowest point before the run was 895. So before this bullish run even started, it was at 895. The lowest point reached was 880, and the lowest point before the run was 895. And the bulls have started to gain some momentum here, and we're currently above the 50-day moving average. So let's move this to their new locations, and our resistance levels and supports have slightly changed. So we want to look at them closely for what is important for tomorrow. Now this is a pretty narrow stretch here, but I do want to point out that the highest point reached was up here at 1245, 1244, give or take. And that needs to be broken through so this can see new highs and new resistance levels. But before breaking through that, the bulls need to break through the first resistance level. Now, the 50-day moving average is important. It's 1109. Super important to keep in mind. 1109, we're above it, we're in bullish territory. We're below it, we're in bearish territory. So right now, we are currently in bullish territory, leveled out at 1162. For the bulls to continue the momentum, they need to break through the highest point that they reached in the bullish candlesticks. I know that this one's a little bit higher, but that was the beginning of the fall. And that is this resistance level of 1214. The bulls need to break through it, turn it into a support so they can pull away, hit newer highs and new resistance levels. By doing so, they pull away from the 50-day moving average in an upward direction. So super important for the bulls to break through resistance. I want to emphasize that they need to break through resistance to continue the momentum. On the other hand, we have what the bears want, and this is a very close stretch. Our 50-day moving average is 1109, and the support level is 1142. If 1142 is broken through, you have that small window between 1142 and 1109 to see the behavior of this stock. Is it quickly moving down, or are the bulls trying to reappear and keep this in bullish territory by bringing it back up? Those are the cues you want to pay close attention to and be mindful of. Put your 1 minute, your 5 minute, your 15-minute chart frames, and also look at the volume between the inflow and the outflow to see who is dominating the chart. So you have that small window, and I want to emphasize to all investors, pay close attention to how this stock is reacting if it breaks through support, because you're still in bullish territory. But if the bulls don't reappear and bring this back up, the bears could be on their way to bringing this below the 50-day moving average into bearish territory. As always, if you found this video helpful and informative, please do so and subscribe. Don't forget to hit the like button to let me know you watch this video. Share this with your friends and community. Okay, so what is the trivia question? Well, the trivia question in today's video is that I want to ask you guys one of the most important things for the upcoming days and weeks. I want it to be valuable, and the question is, what is the lowest point in this bearish run reached? But what was the point where the bearish run actually turned around and we hit this bullish run that we just recently hit? So the two questions are, what's the lowest point reached in the bearish run, and what was the lowest point before this bullish run happened and the bulls were able to start this momentum to where they're at now? Those are the two questions, and those are two important numbers to keep in mind for the next coming days and weeks. I look forward to seeing your guys' answers down below. And as always, thank you guys so much for watching, and let's make some money. At the end of this video, there's going to be a pop-up video, and I go into detail about the S&P 500 index and how it's been rising up several points on scheduled dates. What happens on those scheduled dates, which are the dates that I circled here on the chart and we're going to see for ourselves? Well, the S&P 500 index rises up several points, and by doing so, they're bringing up several ticker symbols, not all of them, but most of them, up with them. And these ticker symbols are rising up 30 cents to $3 per share. And I know it doesn't sound like a lot, but per share, that does add up. And one thing I am really big on is profits. If you put $1 into the market and you get out with $2, you've made profits. You've done what the whole purpose of being in the market is for, to maximize profits and minimize losses. And with the Federal Reserve pumping the markets on these scheduled dates, bringing the S&P 500 index up also brings up individual ticker symbols with them. And again, 30 cents to $3 may not sound like a lot of profit per share, but that does add up. And like I say, profits are profits. So we're going to look here at some of the dates so that you guys can see what I talk about in the video. And it's a weekly series. I wouldn't want you guys to miss out on it. Definitely click on the video as it pops up at the end of the video and check it out. But here we are with one of the first pumps in the scheduled dates pumps. So the first one, since the last time that they had released this, they released this on September 14th, and the next one's coming up on October 14th, which is like a week from now. And on the 15th, they scheduled it. And as you can see, this is the 14th, and the 15th is this big green bar, and it rose up. So on the 14th, we were at around 33.84, and it rose up to 34.20. I mean, that's 40 points risen on the S&P 500 index, and that's creating that catalyst for individual ticker symbols to rise up 30 cents to $3. We're going to look at another one here, and the next one was on September 22nd. And here we are on the 21st, after falling from that last pump, and the market had been falling, and you could see that there is volatility on every single day of the market before the dates of the pumps, but on the dates of the pumps are the days that the most green happens, for the most part. Not every time, but for the most part. But on the 21st, which was a Monday, it was rising up, and it rose up to this point here. And the next one was the 22nd. So this is the last 21st candlestick, and this is the first 22nd candlesticks. And we were at 32.70. This one rose up all the way up here to this point right here. This was the last 22nd candlestick to 33.19. I mean, if we go back, we were at 32.70, 33.19. That's almost 50-point jump here for the S&P 500 index. And again, individual ticker symbols rose up with it, and it created that catalyst a little bit before the anticipation, and on that date it rose up. Now on this next pump, which was a little bit different, there was a catalyst formed beforehand, and it rose up to these highs on the 28th of about 33.59. It actually dipped on the date of the next pump, which we see it here, which was on the 29th of September, and the next one was on the 6th, which just happened yesterday, and it actually slightly dipped. Now, not every time is these pumps going to rise up the market like we've seen here by a lot of points, but it still rises it back up or levels it off from hitting newer lows and leveling off the market itself. Because if we look at the previous notes that I did beforehand, it was actually rising up with it. The volatility was there, but you were able to buy, like for example, how we bought here on the 15th and it rose up. Well, it's been falling and then very volatile here, up and down. Beforehand, you can buy at the beginning of the scheduled pump dates and hold a couple weeks and ride out several pumps, and you were going on your way up. But right now, even as the market's going down, it's a great opportunity to take advantage of the fact that the Federal Reserve is pumping the markets, and there's an opportunity to make profits. So here we are on the 29th, and it fell to lows of 33.28, and it rose up to these highs here of 33.49. I know it doesn't sound like a lot, but that's still a 20-point jump after dipping and recovering, and then it continued to work its way up to newer highs. Now here on the 6th, which on the 5th it started to rise, it leveled off. This is the last candlestick of the 5th coming up right now, and we're about to see it here. Yes, this is the last candlestick of the 5th, and it rose up, and all the way to the last candlestick of the 6th, it rose up another 20 points. I mean, we're down here, and it ended up around here. So right now, something I'm noticing is that these pumps are creating less of an effect on the market, but it's creating that upward direction from falling to newer lows, but it's still helping the market rise up. And even though the S&P 500 index is rising several points, there are individual ticker symbols rising up, like I said, 30 cents to $3. Check out the video. I go into more detail. I don't want you guys to miss out on this great information. Click on it, and thank you guys so much for watching, and let's make some money.